feeling. This place is jumping off hard as it can get. No, we won't ever stop dancing on the edge. We like it dangerous, we like to see you spit. Turn up another notch, you ain't seen nothing yet. Let me tell you something, let me tell you something. Let me tell you something, let me tell you something. Right now, right now. Right now, right now. Right now, right now. Right now, right now. Got a real good feeling. Got a real good feeling. Like there is lightning deep in my bones. Got a real good feeling. I won't hit no ceiling. I'm going higher than I've ever known. Yeah, I got a real good feeling. I won't hit no ceiling. Like there is lightning deep in my bones. Got a real good feeling. I won't hit no ceiling. I'm going higher than I've ever known. Got a real good feeling. Right now, right now. 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 Oh, I got a real good feeling. Got a real good feeling. Like there is lightning deep in my bones. Yeah, I got a real good feeling. I won't hit no ceiling. I'm going higher than I've ever known. Yeah, I got a real good feeling. Got a real good feeling. Like there is lightning deep in my bones. Yeah, I got a real good feeling. I won't hit no ceiling. I'm going higher than I've ever known. I got a real good feeling.
Hey guys, what's going on? Jeb here, and in today's video, we are going to be discussing Ethereum, and we're going to be talking about a bunch of major points as to why Ethereum might be about to go into a major breakout here in the next couple of days. We've got some juicy price predictions for you. I am back from vacation, and I am joined, as always, by my co-host and your president, who did a great job last week, Kinda Crypto Tim. How you doing, Tim?
What's up, everybody? For all of my efforts last week, definitely not high. Zach thought very highly of me and got me this Dwight bobblehead. So it's not a trophy. It's not the HODL trophy by any means, but it's a close second in my heart.
The HODL trophy.
But I will get that trophy later this week, and we'll find out this afternoon. I would have had it last week, I'm pretty sure, but
we shall see about that.
Doesn't matter, you know.
We shall see about that. We are also joined, as always, by our producer, your one and only Smangatan. How you doing, Smang?
Hello, everybody. I love you guys.
You heard it here first, folks. You were loved by an orangutan ripoff. Guys, we have a lot to talk about in today's stream. We have a prediction that Ethereum might be about to break over $3,000, and we have technicals and fundamentals to back that up. We also have some very interesting news coming out about Bitcoin transactions falling to very low levels, and we're also going to be talking about 5 things to watch in Bitcoin this week. So before you leave this stream, you'll have a much better understanding of where Bitcoin and crypto is now, where it's going. So make sure to leave any questions you have in the chat, and we'll get to that pretty quickly here. I think we want to kick the stream off with a little bit of Ethereum technical analysis. Is that right?
Yes, sir.
I think we ought to do that. So let's go ahead and jump onto my chart, and we shall start. Guys, Ethereum, as you know, has been trading sideways over the last couple of days, ever since the 17th of May, when Bitcoin, in this case, Ethereum dropped down to around $2,000 and even lower, all the way down to a bottom on the 23rd of May. It's been trading sideways. And there's a very clear pattern that's been developing over the last week and a half or so that I've been gone. There's a downtrending level of resistance right here on the 4-hourly chart, and an uptrending level of support right here on that 4-hourly chart. This creates a rising symmetrical triangle pattern. That you've never heard? Yes. Okay. It's a rising symmetrical triangle pattern. That's what I call it. The reason this is a symmetrical triangle pattern is because we have a downtrending level of resistance and an uptrending level of support, as opposed to a flat level of resistance and an uptrending level of support. This would be an ascending triangle pattern. And if we had both of these moving to the upside in some fashion like this, this would be a rising wedge. But no, this is a symmetrical triangle pattern because our descending trend line of resistance is, in fact, descending. No matter how you look at it, the point is this. If you draw the midline through this triangle pattern, notice that it's pointing to the upside. Notice that it's pointing up at maybe about a 15-20 degree angle. That indicates that the bulls are stronger than the bears right now, and it indicates that we might be about to move to the upside. A lot of people don't really understand the exact difference between a symmetrical triangle pattern and a rising triangle pattern, an ascending triangle pattern. The reason that they're different is because the symmetrical triangle pattern typically means that you're going to continue in the trend that you were already in, whereas an ascending triangle pattern means that you're going to normally break to the upside. In this case, we're finding something relatively similar because a lot of people, including Tim, have drawn on their charts a flat level of resistance like this, which means the vast majority, maybe not the vast majority, but a large portion of the technical analysts are seeing this as an ascending triangle pattern. Remember, guys, technical analysis is just us trying to understand what other traders are thinking so that we can use that knowledge to make trades of our own based on that knowledge. So if everybody else, or at least a large portion of them, are seeing a flat level of resistance here, then they might be seeing this break to the upside. The reason this is important is because we need to have a strong foundation in charting so that we can make predictions on where Ethereum is going to go this week, so that all the fundamentals that we're about to discuss make sense. Let's go ahead and zoom out to the daily chart because there's a couple of other points I want to make here. Number one, in this symmetrical triangle pattern, we have already moved very, very far into it. If you'll notice, we have been in the symmetrical triangle pattern for 19 days now, and there's only about 20 days in this symmetrical triangle pattern the way that we have drawn it. That means that this market is very, very far into the symmetrical triangle pattern. If we bring up Bollinger Bands here, you will see that the volatility on Ethereum has dropped off in a major way, and because that volatility has dropped off so much, it means that we're probably about to see a major breakout. Remember, guys, whenever you see the Bollinger Bands constricting, it means the volatility is going down, and it means that we're about to go through a different market cycle. Remember, guys, I say this all the time. Markets are cyclical. This market had a period of very high volatility back in mid-May. Now it's gone through a period of very low volatility. So next, we should be seeing a period of very high volatility, which indicates that we're probably going to see a major breakout of this triangle pattern, especially considering we're so far into it. For any of you guys who don't know, generally speaking, you see a symmetrical triangle pattern break about 7% of the way through. We're more like 95% of the way through right now, and we still haven't broken it. Looking at volume, another confirmation that we need to look for is declining volume. The volume has declined quite a bit in the symmetrical triangle pattern, which I probably said symmetrical triangle pattern 100 times so far. I'll just say triangle pattern, might be easier. We have seen the volume decline quite a bit, which is another indication that we're seeing a cycle of volume, high volume, low volume. Next, what comes next? High volume. So with all that said, I think a breakout is about to come to Ethereum for all the reasons I just stated, but we're going to be talking about for the rest of this stream where that breakout might be going. So let's go back to full screen. Let's discuss this. I want to hear what you guys think in chat, and Tim, I'd love to hear what you think because you've been looking at this chart.
Yeah.
Over the last week, because I have sat down, I have not done technical analysis for the last week except for the last 10 minutes, just so you know. So we're learning together.
This is really interesting. I'm looking in chat to make sure there's no good questions. A lot of people saying we missed you, Jeb. Some people saying some proper technical analysis. That's probably true. But the thing is, and I would love to see in chat, this might be a first on the show. And this is weird because I really have no business to do this, but this is part of what I have to do because now that I've gone through CT2A, I have to look at these things. Jeb, I would like to question your chart. I'd like to look at your chart and understand where you get what you get. So go to yours on there so people can see it real quick.
I'm here.
It's saying just a lag. Where I see you drawing your lines, I see you using wicks, not candlesticks, correct? So could you explain why we're using wicks instead of candlesticks on this one?
So in technical analysis, you want to use one or the other. And you can't, so if you're using just wicks, then use just wicks. If you're using just candlesticks, then use just candlesticks.
Yeah.
If the two different methods of drawing trend lines contradict each other, then you have a problem and you need to come up with a reason that you're using one or the other. If they both end up with the same result, even though the trend line just looks a little bit different, then it doesn't really matter. In this case, right now I'm using a wick down here on the 4-hourly chart, and I'll explain the time frame in a second because that's part of where that's coming from. I'm using this candlestick down here just because if I don't use the candlestick, or excuse me, if I don't use the wick and I use the candlestick, then we still have an uptrending level of support right here, no matter how I draw it. You can draw it like this and it's just as valid. In this case, with the downtrending level of resistance, I think that's what you're really pointing to.
Well, I think I'm looking at both of them, actually.
Looking at both? Okay.
Yeah, because the reason why I had a ascending triangle pattern is because if you were just using the candle bodies, you have a flat top sitting there right at, what is that? About 20. I'm also on Coinbase. I know you're not on Coinbase.
I'll do it on Coinbase.
It's sitting right there around that 2,900 level, 28, just below it. Those, if when I did this, I drew it last week. Those candle bodies all kind of stop right there.
You're looking at the 4-hourly chart or the hourly chart?
4-hourly chart.
4-hourly chart, yeah. So on the 4-hourly chart, if you click your trend line, then you can see on the right the top level, the highest point and the lowest point. You actually, they can see this. If you guys see over here, I'm going to get rid of this just so you can see one trend trend line. If I click on this, notice how it says over here $2,926 and $2,871, and then it shows the time down here and the time down there. Essentially what that is showing you the coordinates of this point and the coordinates of this point. Over here we have the y-axis. So even if we use candle bodies right here, then what you're seeing is that according to this over here, which if I click away, it's gonna show it. But if I click on it, see this top is at 29.26 right now, and 28.71 right there. So that means that the way I've drawn this anyway, right here is 29.26. Over here is 28.72. I think is what it said. So this is kind of the point I was making earlier, is that it doesn't really matter exactly. It does matter quite a bit what other technical analysts are saying. Tim's seeing something different than what I'm seeing right now, so he's potentially going to make a different trade than I would have because he's seeing different technical analysis. This is a very important lesson in technical analysis. You're not the only one trading. In fact, you're a very small minority of the people trading, if even a billionth of a percent. Like, there's so much transaction volume going on. So you have to be constantly thinking about what are other people seeing. And that's why I said earlier, based on what Tim said before the stream started, that I'm seeing a symmetrical triangle pattern based on my analysis. Other people are seeing an ascending triangle pattern. Let's keep both of those in mind because the technical analysis informs the trading. Does that make sense?
Yep.
Yeah, cool. That's a great thing to point out.
Yeah, no, a couple super chats, then we can get back to it. Vlad Yen said, "Hey, thank you for coming back, Jeb. Do you think Cardano is building a bearing wedge?" So I'm assuming what he's talking about is an ascending wedge. That would mean it normally breaks bearish.
Yeah, so right now Cardano, I can jump onto Cardano real quick, and then we're probably gonna come back to Cardano later on in the stream.
Yeah.
On Cardano, we have an uptrending level of support right here, and we have a flat level of resistance or a downtrending level of resistance in the same way as Ethereum. It kind of depends on how you draw it. At the end of the day, I don't really see a rising wedge here. What I do see is that there's a lot of consolidation going on. I see an inverse head and shoulders pattern. I see pretty much the same thing that we're seeing on Ethereum, declining volume. We're seeing the Bollinger Bands drop off, which means that the volatility has declined. As you guys are going to see at the end of this stream with my predictions, I am the least bullish on Cardano this week for reasons that I'll go into later. I don't think that Cardano is primed for a massive correction, but I do think that Cardano is primed for volatility. I'm just not exactly sure which direction that volatility will be going. With that said, I think Matt C had a super chat as well.
Yep, he did. And his was, "Welcome back, Brother Jeb. The band is back together."
Heck yeah.
Yes.
Guys, make sure if you are enjoying this stream and you're glad that I'm back, I'm not trying to pat myself on the back. I realize that's what that sounded like. But if you're glad to be here, make sure to smash that like button. It really helps out the channel when you do that. We very much appreciate everyone who contributes in that way. And subscribe to the channel if you haven't already. Got a lot of great content for you today, so make sure you stay tuned. By the way, if you haven't already, we're actually active over on TikTok now. You can follow us at CryptoJebOfficial. While you're at it, you can follow us on Instagram and Twitter at CryptoJeb as well. I post thoughts over there, and there's a pretty funny video between Smay and Tim over on our Instagram, so you might want to go ahead and check that out. Links are in the description box down below as well. Guys, I'm going to be on Around the Blockchain this week, by the way, so if you're interested in that, make sure to go subscribe to BitBoy Crypto. I will be there Tuesday and Thursday, but I think we have some articles that we need to dive on into, unless there is anything else.
We good.
Let's do it. So guys, we have a headline here that reads, "Balances of Ethereum on crypto exchanges hits 2-year low." Let's go ahead and read through this really quickly. The amount of Ethereum on leading crypto exchanges has reached its lowest level in more than 2 years based on the latest figures published by crypto and analytics platform Glassnode. If anyone from Glassnode is watching, I love your platform and we would love to be a sponsor. We would love for you to be a sponsor of this show. Brokerages are now holding the smallest amount of Ethereum since June 2019, as reported by blockchain research platform Blockport. This suggests an accumulation occurring at the current price before the next potentially sharp Ethereum price movement. This is a big deal. Let's keep reading, and I'll break it all down for you here in just a second. Exchanges witnessed a 31% decline from approximately 19 million Ethereum in July 2020 to the present, where crypto trading platforms are holding less than 13 million. Furthermore, since 2021, the amount available on digital asset exchanges has been in a downtrend and has thus seen a drop in gas fees. This is very interesting, and I'll tell you why. Let's go ahead and read this real quick. Glassnode pointed out an increase in the number of Ethereum addresses holding at least 0.1 ETH over the last few months. Almost 5 million addresses are now holding at least 0.1 Ethereum, the highest level on record as claimed by the company. So let's go to full screen. Let's break this down because there's two major points here. Number one, we are seeing Ethereum be spread more. We're seeing it become more decentralized as more exchanges are losing some of their Ethereum stock, and more smaller holders like you and I are starting to hold on to 0.1, 0.2, maybe 1 Ethereum or a little bit more. Ethereum is as we're going here through this corrective movement, we're seeing what is called a distribution. We're seeing a distribution of Ethereum between multiple different exchanges, between many different wallets. This is something that you see at the top of a bull market, and sometimes you see it happen halfway through a bull market. By the way, I'm not saying the bull market's over, but this is something that is characteristic at the end of a bull market. And again, sometimes in Bitcoin's past, it can show up in the middle, so don't be worried about that. But what you see happen is something called a distribution phase. As the market rallies, tops out, and starts going down, a lot of times the stocks, this started in the stock market back in the early 20th century with the Dow Jones Industrial Average and all the different stocks, you would see the stocks get to be distributed. They'd get dispersed. It's like you take some water and you pour it on the ground and it just goes everywhere, right? That's kind of what we're seeing happen on Ethereum. We're seeing it spread out a lot. That's good for a couple of reasons. Number one, it means that Ethereum is becoming more decentralized, which obviously makes the network more secure and makes Ethereum a stronger cryptocurrency in general. Decentralization is one of the spines of what we call modern blockchain technology. So that's a very good thing. It also means, on the other hand, that we're more posed for a larger rally in the future. Why? Because whenever we see that Ethereum get distributed amongst so many addresses, we're seeing a large number of people holding onto Ethereum. That means that we're much less likely to see one or two or three whales or major power players in Ethereum sell all their Ethereum and crash the price, or buy all the Ethereum and buy it up. It makes the market a lot less easy to move. It makes the market a lot slower. It's like you're building a bigger ship with a smaller rudder. It's a lot harder to change the price of Ethereum, and that's actually a very good thing for us who are looking for long-term price appreciation on Ethereum, because I've said for a long time, one of the banes of the growth of cryptocurrencies as far as price action is concerned is these massive swings of up of 200% and down 50%. That scares away a lot of people. So the fact that this is happening is actually a very good thing for Ethereum. But that's actually the secondary point to the first one. And the first point here, the main point here, is that we're seeing Ethereum leave exchange wallets and move into different smaller wallets. That is very important, and I'll tell you why. When Ethereum is on exchange, you are one click away from selling it and dropping the price. When Ethereum is in a cold wallet, you are at least 2 clicks away from selling it and dropping the price. It really does boil down to that. That's really the point here. When Ethereum moves off of exchanges, it generally means that people are taking it out of what might be a trading portfolio, putting it in what might be an investment portfolio. It means that people are moving from a short-term focus to a long-term focus. It means that people are no longer worried about trading it and flipping it and selling and buying. They're more interested in holding it for the long term. When you see Ethereum or any crypto project move off of exchange into long-term storage, it means that people are bullish on the long-term future. And that is why this is such a big deal, is because we've seen, as you can see here on my chart, on my screen, Ethereum balances on exchanges. This has been going down since, September of last year. We have seen this decline from 19 million Ethereum down to 13 million Ethereum. As the price has gone up, yes, even in the last month that we've seen the price correct, we have seen more people take a long-term perspective on Ethereum. And that's a very good thing for anyone holding Ethereum, because the more Ethereum that gets taken out of circulation, naturally, by simple laws of economics, you're going to see the supply go down. The demand, as we've seen from fundamentals, is continuing to go up. What does that mean? It means the price is going to go up in the long run. I'd love to hear what you guys think about that in chat. This is why understanding the technicals and the fundamentals are so important. I've shown you some of the technicals. We're going to go back to the technicals in a little bit, but the fundamentals right now are backing up the technicals when we say that we think the short, medium, and long term are probably going to be somewhat bullish for Ethereum. Love to hear what you think about that, Tim.
Yeah, no, there's a couple people asking in chat. They said, would this be a reflection of ETH staking for Ethereum 2.0?
I think part of it probably is. Yeah, I believe it is. A lot of people... So, yeah. I don't stake Ethereum, so I don't have firsthand experience of this. I am simply speaking off of what I do know, which isn't a whole lot because I don't stake Ethereum. I think you can stake Ethereum on certain exchanges, so I don't think that's all of it. I think this was happening anyway. But I think that might be part of it, yeah.
Yeah, there's actually a lot of people saying that people are pairing. No, whether that's the case or not, that's a very widespread opinion. So again, as Jeb was talking about earlier,
and whether they do it or not, it has the same impact.
Yeah, well, a lot of times, but things happen just based off of opinion. Whether it's true or not, if people have an opinion and ends up flexing in the market. What I know about Ethereum is we have a lot to see come out. Obviously, we're waiting on this July London fork, which is going to include EIP 1559. I don't remember the source he used, but our head of research, Dasa, he said that there's actually something that came out that the official launch of ETH 2.0 got backtracked again or got pushed back again, which We shouldn't be expecting it now until probably the summer of 2022. So we will see what happens there. We did get a super chat just now from Jay Simmons
Good
saying,
question.
"Newbie here, forgive me if this is dumb. Can you explain what staking is in idiot terms?"
I can absolutely do that. That's a fantastic question. So there's two different ways of reaching what is called consensus in blockchain. Consensus just means that everybody agrees that transactions happened. You got to have consensus for everybody to agree that a transaction happened. For example, in the physical world, you don't need everybody to agree that a transaction happened because Tim physically has $20. You don't need everybody to know that. The fact of the matter is, it is physically in his custody. On blockchain, you have to secure that transaction. You have to make sure everybody is aware that that transaction happened, or did it really happen? You know the old saying, if a tree falls in the forest, it didn't make any sound. If the transaction happened, but you're the only one that knows about it, did the transaction really happen? So every blockchain has to have something called a consensus mechanism. That is a way of getting everybody to understand, hey, a transaction just happened. There are two major ways of reaching consensus. There's mining and there's staking. Mining is done through something called the SHA-256 algorithm over on Bitcoin. You don't need to know what that means. Basically, what mining is a bunch of people getting computers together. They work at complex mathematical and cryptographic problems called hash functions, and they mine blocks, and then everybody comes together. They say, okay, this block, boom, we got a block, puts all the transactions in, everybody's notified, and then everybody reaches consensus. Staking is done in a slightly different way. Instead of mining with graphics cards and ASICs and other kinds of miners and computers, what you do is you stake your Ethereum, you put it up inside of a locked wallet where that Ethereum or that whatever project, which Ethereum is not proof of stake yet, that Ethereum acts as your mining power in the same way a computer would. So it's the resource that you're putting up to make money and validate those transactions. It's a mechanism of reaching consensus in an algorithm. It's a great question. It is much more, proof of work is much better for projects like Bitcoin that don't need very high transactional throughput, but need to be extremely, extremely secure and decentralized, whereas proof of stake tends to be a lot better for cheap, fast, high volume transactions that are needed to support things like decentralized application protocols, such as Ethereum and Cardano. For any of you guys who don't know that Ethereum is moving to proof of stake, that's why Cardano is already there. Ethereum wants to move to proof of stake so that it can support the kind of transaction volume that it needs to reach its goal. Good question. Good question.
Yeah. I think if that's all we got there, we can move on potentially into, before we do the technical on Bitcoin, we actually see pretty similar things happening in the Bitcoin world, and I know you're going to cover that.
Yep. Yeah, so let's go ahead and do some Bitcoin technical analysis here, guys. We're seeing something similar but not identical happening on Bitcoin as we saw to Ethereum, so let's go ahead and reach for some technical analysis there. Thank you, by the way, everyone who's welcoming me back from my vacation. I had a great time in Tennessee. We might talk about that a little bit later on in the show. Anyway, on Bitcoin here, let's go ahead and start with some basic charting. Technical analysis, you generally want to start with just some basic charting. In this case, what I see on Bitcoin is very similar to what I saw on Ethereum. There is a symmetrical triangle pattern going on, or a rising or an ascending triangle pattern, however you want to look at it. There's a triangle pattern going on Bitcoin, and we can see it happening right here. If we go down to the 4-hourly chart, and by the way, the reason I'm using the 4-hourly chart, I didn't mention that earlier on Ethereum, is because generally speaking, I find that the 4-hourly chart is much better for looking at daily movements. I like looking at where the movement is happening and going down one interval. So that's why I'm looking at the 4-hourly. And by the way, by down one interval, I'm talking daily chart, 4-hourly, hourly, 30-minute, 15-minute, 1 minute. I'm not talking about go down from 4 to 3 or 3 to 2 hour. I'm talking about major intervals. So in this case, I'm down on the 4-hourly chart on Bitcoin, and you can see that I have a symmetrical triangle pattern drawn right here. This is constituted by these levels right over here. This is our resistance trend line. And then I'm constituting it by these levels down here. Now, the same question might come up. Why am I using the wicks instead of the candle bodies? In this case, if I use the candle bodies, what I have to do is draw this. And that's not very helpful. What that does show us is a rounded bottom, though. So it is useful. It's just not useful for the point I'm trying to make here. Notice how the bottom is slowly shifting in direction. If we cut out the wicks, the bottoms are slowly, they're not anymore pushing to the downside. Instead, they're flattening out and starting to move to the upside. So that is valid, and that is important, but it's not the point. The point here is that Bitcoin is in a symmetrical triangle pattern. I'm going to draw it like this for simplicity. Doesn't really matter how you draw it in this case. What does matter is that a symmetrical triangle pattern is, generally speaking, a continuation pattern. What that means is that however the trend was moving into the pattern, generally speaking, you're going to see the trend move out of the pattern in the same direction at the same amount. If we were to do that, that puts a price prediction for Bitcoin below $10,000. Now, let me ask you a question. Does that sound reasonable? Does that make sense with the fundamental environment that we're looking at? This is why it is so important to combine technical and fundamental analysis. You got to have both. A lot of people out there want to do technical analysis, and a lot of people out there want to do fundamental analysis. I have found this is one of the only channels on YouTube that tries to give you both. We try to give you the technicals and the fundamentals because they both have gaps that the other one can fill. It's like two people that are single and then they get married, and you're like, wow, we complete each other, right? You know, it's all romantic. They make movies about it. It's the same thing. You want to marry technical and fundamental analysis so they cover up each other's flaws and compromise and make up for each other's weaknesses. In this case, the technical analysis tells us, okay, we're going down to $10,000. If we only pay attention to the technicals, then that's what we have to go by. If we understand the fundamentals, we realize, that's probably not reasonable. So let's take another look at this. If Bitcoin is going to go down to $10,000, what would have to happen? Well, first of all, we would see Bitcoin pull way back down here. We would see it pull down to what? That'd be about a $200 billion market cap. With all of the developments we've seen, that just doesn't make sense. We would also have to see that the RSI would push so far into oversold territory that it would look worse than what we saw at the bottom of the 2018 bear market. We would probably push down to like 8 on the RSI based on the time frame that you would expect that to happen. Remember, guys, if we pulled back this quickly, then technically speaking, the technical analysis would say we should pull back that quickly. And we should be down there in, I don't know, 2 weeks. Probably not going to happen. Anyway, I've made my point on that. Here's what I think is going to happen instead on Bitcoin. We do have to take into account that the technical analysis is right until it's not. And right now, the technical analysis is saying we're in a symmetrical triangle pattern. We are seeing that the volume is decreasing. We are seeing that the volatility has dropped off a cliff. That is a trend. And remember, guys, markets are cyclical. So the trends will go like this, and then like this, and then like this, and then like this. They cycle. The trends go up, and then the trends go down. Most markets are cyclical. In fact, all markets are cyclical. Markets are cyclical. In this case, we've seen major volatility. We've seen major downtrends. We've seen major consolidation, followed by major sideways movement, very low volume, very low volatility. What comes next? Naturally, we're probably going to see very high volume, very high volatility, very large price movements. So the question is, if we're probably about to see that, which direction do we go in? This is the same question we just asked of Ethereum, and I think the answer for both of them is north. I don't know that it's going to be a massive recovery, and we're going to be at $66,000 in the next 2 weeks, but I do spy with my little eye that we're probably going to see some kind of rally happen on Bitcoin. Why? If we look on the daily chart, the RSI bottomed out to the lowest point that it's been in a very long time. It's sitting at 23. Bottomed out on May the 19th. That is the lowest point that we saw since March of last year. Over a year has been since we saw a correction that large. And guess what happened after we saw that correction? In the next year, we rallied 1,400%. Now, we might not rally that much this time. That would put us at, what, like $400,000 in the next year. I don't know that we're going to rally that quickly. The point here is that we're probably going to see a large movement on Bitcoin north. We also saw bullish MACD cross on Bitcoin. And by the way, I do understand that there is a cross happening between the 50 and the 100. I do understand the 50 is crossing down below the 200, but that is one technical indicator. And if you look in the history of Bitcoin, there are times where death crosses happen in the middle of a bull market, and those death crosses do not result in the end of a bull market. I think if this death cross is to happen, which it almost certainly is going to now, I don't think it's going to be the end of Bitcoin. I think this just means that we got overextended. We needed a correction, like I've been saying. Anyway, with all that in mind, here's what I think is going to happen to Bitcoin. I think the Bitcoin is going to rally up here over the next couple of days up to the resistance level, and either here or here we're going to break. And once we break, then we have a couple of resistance levels that we need to pay attention to. Namely, we have $39,500. That's our previous level right here. And then we have $40,000 and $40,500. These three levels can really be brought together into a zone. And I'll show you what that looks like. This zone right here in between $40,500 and $39,500 is constituted by this high right here, and it also includes $40,000 in the middle, which is a big even. We are likely going to see Bitcoin try to get through that level over the next week. Here's what I think is going to happen, though. I think if we do that, there's a strong chance that we're going to break that zone of resistance. We're going to rally up here to $42,100 to $43,100. Now, back up. Where to get those numbers from? If we look back in history here on Bitcoin, we can see a previous all-time high for Bitcoin on January the 9th, or January the 8th, actually, 2021, was $42,100. We also see that there was a bottoming out right here at $43,100 on the 28th of February. That creates another zone of resistance. So we have our first zone of resistance between 39.5 and 45. $40,500, that is. We next see a zone of resistance in between $42,100 and $43,100. I think that Bitcoin is going to break bullish out of this pattern based on the MACD, based on the volume, based on the Bollinger Bands, based on a lot of technical analysis and fundamental analysis. I think it's going to be breaking through this zone, wind up somewhere in between these two zones around $41,500, which is the exact prediction that I made, and then Tim made the exact same prediction, so I had to move mine. I decided to move mine to the upside. We will see if that's a good decision because Bitcoin does have a lot of resistance. The point is here, I think that by the end of this week, we're going to see Bitcoin rising another couple $1,000s. Let me go ahead and show you what the end of this week looks like. What is the last day of this week? It is the 11th. The 11th would be right here. So I think that we'll probably be somewhere in between those levels. So that's my technical analysis on Bitcoin. I'd love to hear your thoughts on that in the chat. Tim, what do you think?
So I also had us in a symmetrical triangle pattern. And actually, what was going on in chat, there was some speculation. Some people don't like my technical analysis. I'm completely fine. If people don't like it, it's fine. It's fine. We don't have to deal with that. Crypto Rumor, you're good. We good. I understand what you're trying to say. You love Jeb, ultimately, is what you're really saying. I had us also in a symmetrical triangle pattern, and I don't see, no one can look at what I'm looking at. We discussed that this morning. We only hook up one computer at this time to it. What Jeb is saying, though, is absolutely true. What he was just saying, we both, when we did our prediction, have it doing almost exactly the same thing. Yeah. I didn't use candle wicks. I used candle bodies to make this pattern. Either way, though, what he was saying is exactly echoing. I don't know if he watched every single episode last week, but it's exactly what I was talking about last
Tuesday
week.
and Wednesday.
I think I talked about it later in the week. How, yes, there's actually a couple, if you look at a couple different technicals, a couple different indicators, there's evidence that it could go down to $8,000. There's indication it could go down to $15,000. There's indication it could go down to $20,000. Yep. There's indication it goes back up to $100,000. Ultimately, we are in a place where if you were going to put your money on either one of these, whether Bitcoin goes back up to all-time high or whether it drops back down to 20,000, there is some good evidence there. What we have to look at are things like, I think Jed's about to read an article talking about Bitcoin doing pretty similar to what Ethereum's doing in terms of the amount of people holding it. The amount of people right now refusing to sell their Bitcoin has to be talked about. And now, whether or not that keeps us above 30, I'm not 100% sure. But what he just drew, that breakup, just so you guys know, if Bitcoin breaks out of that bullish resistance, that descending resistance in the symmetrical triangle pattern, that doesn't mean it's a lock to stay up there. We have seen over and over in this cycle, again, I've only been around for this cycle, but I've watched several times we break the opposite direction we think we were going to before finally going back to where we were going. So just because we break bullish does not mean we won't break bearish. Just because we break bearish does not mean we'll break back bullish. Ultimately, we're kind of in a spot right here where it could be a bear pennant. I understand why people think that, but there's also a lot of fundamentals that would suggest no, this is actually us moving sideways before going back up. Either way, keep your eyes fixed on a lot of different things. Don't just fall in love with one indicator. Learn to read a lot of them because you got to look at the whole picture.
Absolutely. And guys, to wrap that point out, I want to show you something on the Ethereum chart to make a point here real quick. This will be my final bit of technical analysis on Bitcoin for the day. Then we have some fundamentals to look at. If we can take a look at my screen, you guys will see here back in April of 2018, I remember this vividly happening on Ethereum. We had a downtrending level of resistance, uptrending level of support. Boom, we're in an uptrend, right? Yes, we're in an uptrend. Cool. Guess what happened? Since we're in an uptrend, it's a symmetrical triangle pattern, which is a continuation pattern, we rallied. Well, guess what happened? If you zoom out here, that ended up going into a gigantic correction. We continued, and then we had a massive reversal. Sometimes what you'll see happen is that a continuation pattern will do just that. It'll continue, but then it'll change direction. We could see the same thing happen on Bitcoin. And I want to make this clear because this is very possible. It is very possible that Bitcoin continues, finds support again down here around $32,000, $33,000 and bounces. And by the way, it's also possible that Bitcoin rallies here and then says, no, actually, I think $42,000 is too strong of resistance. And we just crash. And then we rally. Bitcoin can do whatever it wants. Technical analysis is like trying to ride a freaking bull. You might manage it for a little while, but eventually you're going to make a mistake and you're going to have to get back on the bull, right? It's going to screw you over sometimes. Technical analysis is not flawless, but what it is a way of us predicting what the future is going to do based on what the past has already shown us. That's why the technical analysis is so important, so that we can understand what other people are thinking. With that said, there is a piece of fundamental analysis that I want to bring to your attention. The number of daily Bitcoin transactions has now fallen to 2018 levels. For anyone here in 2018, you will know the transaction volume on Bitcoin plummeted, and because it did that, the fees went down. Transaction fees got up to $55 at the end of 2017. I was here for the 2020 for the $20,000 run in 2017, transaction fees exploded before SegWit and all these things started coming out. Now we're seeing daily transactions fall to 2018 levels. For anyone trying to move Bitcoin and doesn't want to pay a lot in fees, you will be very happy about this. But there's a couple of different takeaways from this that are important. And by the way, if you're enjoying the stream, make sure to hit that like button. Let's see if we can get to 1,000 likes. Really, really helps out the channel when you do that. We're very appreciative for everyone who does. The number of daily transactions on the Bitcoin network has fallen to a level not seen since August 2018. August 2018, by the way, I remember vividly. One, because it was the time that it was the month, in fact, that the course launched. Actually, it launched in September of 2018. But in August of 2018, we were so sideways it wasn't even funny. August 2018 was one of the most boring periods in the history of cryptocurrency. We had this massive sideways movement, rally, crash, and then for the next 3 months, we did nothing. You know how hard it is to make videos in a block like this? What am I supposed to talk about? I remember that. Anyway, the reason I brought that up is because it shows boredom in the market. It doesn't necessarily show bearishness, but it does show boredom. That boredom can be bullish or bearish depending on the context. In this case, I think it's bullish, but we'll get to that. According to the Blocks data dashboard, the 7-day moving average of daily Bitcoin transactions dropped to 217,000 yesterday. The last time this number was so low was August 31st, 2018. The drop in daily transaction volume comes as Bitcoin's price hovers around the $36,000 mark, down 44% from the recent high of $64,000 mark. Speculation over the causes of the price drop have ranged from Tesla CEO Elon Musk tweets to crackdown on Bitcoin miners in China. You already know that, though. On the plus side, Bitcoin transaction fees are plummeting, making the network cheaper. The average fee is down from $53 to just $7, a decline of 87%. So let's go to full screen and let's discuss this. There are two ways that you can view this based on your view of Bitcoin. If you view Bitcoin as a store of value, a digital gold, where people are supposed to buy it, hold it for long term, and not necessarily transact with it, then you see this as a good thing. If you see Bitcoin having its value from being a daily driver currency that you go and buy coffee with at Starbucks, then you see this as a bad thing. So I have to preface this article by making sure you understand this is either a bullish or a bearish thing, depending on your worldview, depending on your philosophy. That's why I talk about beliefs so much on this channel, guys, is because your interpretation of facts is going to be dictated by your understanding of your own philosophy. My philosophy of Bitcoin is that right now it's acting mostly as a store of value. Most people that use it are using it for long-term investment purposes. Most people that use it are buying it and holding it for the long run. Most people that are using it are not doing daily transactions with it. So I see this as a very good thing because it means people are not doing a bunch of transactions with it. They're not selling it and buying it and moving it around. They're holding on to it and they're not trying to sell it. That's what I see happening here. So I think this is a very good thing for the long run. If you look at the gold market, the more the gold stays in one place, probably the more stable the market is going to be, and probably the more the market is going to rally. If you, however, view Bitcoin as mostly a daily driver currency, then you see this as a bad thing because transaction volume has gone down. I don't think that the vast majority, in fact, I know that the vast majority of Bitcoin holders are not buying Bitcoin at this time to use it as a daily driver currency. That's probably where we're going to go in the future. If you read the Bitcoin Standard, it is of Safadine Amos' opinion that Bitcoin will not be the daily driver currency, but layer 2 solutions built on top of Bitcoin, backed by Bitcoin, will be that solution to global currencies. The point is, Bitcoin is probably not going to be the currency that has a ton of transactions on it. I don't see this as a bad thing. I see this as a very good thing. I do want to hear your take on this in the chat. I think this is another fundamental intrinsic reason why we can see Bitcoin rallying so much this year is because we are seeing fundamentals and technicals across the board look very bullish for Bitcoin. Yes, there are bad things happening on the technicals. Yes, there are bad things happening in the fundamentals. But the longest term perspective on Bitcoin is one that is very bullish and one that is very secure for anyone holding Bitcoin for the long run. Let's see what chat's saying on that.
Couple different things. I don't know how to move. A couple different things here. Someone pointed out, they said, if you look at the fear and greed index, we are heavy fear right now.
Yes, we are. That's
which would point towards buying. Some people are very much disagreeing, so I just want to read everyone's opinion.
Sure.
I'm not going to read every single quote. Some people are saying, hey, you're going to wreck these newbies. The bull market's over. We'll come back here in a couple years. People are welcome to have that opinion. I want to make sure you guys are represented.
Yeah.
Let's see what else we have.
Chris Stuff says, belief has nothing to do with technical analysis. I respectfully disagree. I think it has everything to do with technical analysis. In the same way that two people can look at the exact same facts and be on two completely different opposite opinions.
Yeah.
That is extremely important because technical analysis is not a science. In fact, belief creeps its way into science as well that is the same every single time. How many people look at two different sets of facts and have two different opinions? Your belief says everything about how you will do technical analysis. Myself and Tim, can have the exact same background in technical analysis, but he might believe something different, and so he's going to see something differently. It's very important that you understand. In fact, technical analysis, the whole point of it is to figure out what other people believe, so you know how they're trading, so you know what to trade.
That's what I was about to say. Like, I think you talk about it in one of your videos, that literally the whole purpose, why does Jeb not go down and look at the 1 minute or the 5 minute, or why does he not go out and look at the 1 monthly? Because he's like, traditionally what traders are looking at is the daily and the 4 hourly. Ultimately, what you want to do is, hey, what does everybody else see? What is everybody else going on? And ultimately, that's what makes the technicals go up and down, is a widespread belief held by many people. And that's why sometimes technical analysis works until it doesn't.
Yeah, Cyril just said charts are just emotions, and you're absolutely right. The vast majority of price action on the charts is simply a visualized manifestation of the machinations of the traders, is what I say, to make it poetic so it's easy to remember. Technical analysis and charts are the manifestations of the machinations of traders. That just means that the charts are representing what the people feel. Right now, the people are very fearful. If you've ever looked at the Fear and Greed Index, a lot of times that line looks very similar to the Bitcoin price action, just a little bit more extreme and weighted towards the 100 and the 0. The reason for that is because the chart is also an emotional, a visual representation of the market's emotion.
You know what thing I wish? I wish YouTube on the chats, every time someone asked a good question or had a comment, people could like that and let us know how many people. Because I see a couple people echoing what Oscar's asking. He says, "Good morning. Would it be possible for a Lux Algo video tutorial?" We did a brief one.
Yeah, correct? We did. Yeah, we did.
Okay, yeah, I'll let you answer.
Yeah. So we did a brief Lux Algo tutorial video. We're probably going to do another one. If you're interested in that, check out the channel. It was posted a couple weeks ago now. If you guys don't know what Lux Algo is, it is an indicator pack that has some fantastic indicators. In fact, let me show you something on Bitcoin's chart really quickly here. I won't spend too long on this because we do have to keep going here. But Lux Algo actually predicted this crash. Let me show you. Lux Algo, if I turn it on here, has buy and sell signals and all kinds of things I don't have time to get into. But notice, had a strong red candlestick on the day that this correction started. If you'd have paid attention to that, you would have made a great trade. Look at the past here and then just pause and look at all these signals. I didn't draw these signals. The chart, the indicator pack drew these signals. Look at this. This is good. This is very useful. If you want to sign up for it, the link's in the description box down below. I believe we still have a coupon code called JEB, J-E-B-B. You can use it at checkout for 20% off. If you sign up, you're going to be getting a fantastic product that helps out this channel. Let's go back to Chip. Let's go back to full screen.
Yep, so we got a couple super chats. Let's go ahead and answer those. We have one from Chris Davidson. He says, in your opinion, what do you think prices of Bitcoin and Ethereum will be when we hit the bear market, crypto winter, or is there any way to know this? Thanks.
Yeah, no, there isn't any way to know that. We can have a general idea. One of the things you guys have to understand is that the further away you get in your predictions, the less accurate they're going to be, right? It's very, not easy, but it's, relatively speaking, much easier for a meteorologist to predict the weather tomorrow than a week from now. It's a lot easier for us to predict what's going to happen tomorrow than a month or 2 months or 5 months or a year from now. I think that Bitcoin is going to rally to above $100,000, and it's probably going to bottom out above $30,000 to $50,000 in the bear market. That's what I think. I think that even in the bear market, Bitcoin's probably still going to be, if not $1 trillion market, close to $1 trillion market. That's about the best I can do, though. That's why I don't like doing super long-term exact price predictions. I've done it in the past. It's not my favorite thing to do. If I'm going to do a price prediction, I like to say, okay, month, 2 months out, this is my range, right? Because I want to be as honest with you as I possibly can. Be integrity is a core value here at our company, and it's incredibly, incredibly important to you. If I ever lie to you guys, if I ever tell you guys something that I don't fully believe in, then I can't sleep at night. That's a selfish reason I don't do it, but there's also a very selfless reason I don't do it. Because we run this channel not for profit. We run this channel to make you a better trader, a better technical analyst, and more successful in cryptocurrency. If that's something you're interested in, subscribe to the channel.
Yeah, no, I see a couple comments before we have 2 more super chats, but I see a couple comments I think would be good to respond to. And some of these are by Polvito. Love you, Polvito. But he says it's because predicting based on technical analysis is 50-50. It goes up or goes down. He goes on to say technical analysis only guarantees what happened in the past. The rest is just a guess. That's probably a very widely held opinion. What is your thoughts on that, Jeff?
My thoughts is that from an outside perspective, it can look like that. Look, technical analysis has been around for over 100 years, and it's used by traders for decades to make them profitable. If you weren't using technical analysis, then it is a 50-50 guess. What technical analysis does not do, technical analysis does not guarantee what the market is going to do. That's why I talk about in CT2A, the Cryptocurrency Technical Analysis Academy, linked in the description box down below. If 4,000 students learn technical analysis, let's go CT2A Army. In one of those videos called A Game of Statistics and Probabilities, I explain technical analysis is not about certainties. Never has been, never will be. What it is about is turning your trading into a 60-40 split. You're 60% likely to make a trade right, and you're 40% likely to make it wrong. Technical analysis, depending on how good you are at it, is going to increase that 60 to 65, 70, 75, 80% maybe.
Yeah.
What it doesn't do is it does not guarantee anything. It can look like a 50-50 perspective if you haven't witnessed it work over the course of hundreds of trades. But if you amalgamate all those trades, all those predictions, all those calls, and you're good at it, then you will see that in general it's going to put the odds ever in your favor, and that's why you should invest in your education on it.
That's why I talked about it last week, and we've talked about this a couple different times. It's like playing blackjack, and learning to read the fundamentals is like learning how to play the game, knowing the rules, whereas counting cards doesn't always work. Just because you can count cards doesn't mean you're right 100% of the time, but it makes you more right more often. Same thing as technical analysis. Is it perfect? Every now and then the deck gets reshuffled, but as you learn how to read cards, the closer we get to the end of the deck, the better you are at seeing what's going to happen.
Povito said Jeb can't agree, he sells TA. I do. Our business is built on the back of me selling education on technical analysis, so I do have a bias. What I encourage you to do is go and ask any of the top traders that trade stocks or cryptocurrency on a daily basis. They look at two things mainly. They look at technical analysis and fundamental analysis. The most successful look at technical analysis. Don't ask me, go ask them. That's what they do.
Yep.
Good
Couple
deal.
other super chats. So let's try to get through these because I think we have like 4 of these.
Yeah.
L. Rhymes, I want to thank you. He says Tim did fine last week, took guts,
He did.
and he did not shy
Good
away
job,
from
Tim.
it.
Let's go, Tim.
Thank you.
That was great.
Thank you.
Tuesdays was hilarious.
Yes, May was here.
Smay was here too.
Yeah.
Smay did a good job. Smay did a great job, actually.
But he asked thoughts on El Salvador adoption. Let's be really quick so we can answer the other questions. But that is a great question. What are your thoughts on the El Salvador adoption?
Yeah, I think we actually had an article on that. Let me grab that real quick. Let me go ahead and read this. I will be very brief. President of El Salvador says he's submitting bill to make Bitcoin legal tender. I'll be honest with you guys.
Is that the picture of him?
Is that? I think that is the picture of him.
Dang, that's a swaggy looking guy.
Dude looks like a
All right,
rapper.
bro.
I feel like he's about to drop the mic or something.
All
Dude,
right, bro.
El Salvador, look, I'll be honest with you guys, I haven't had time to read this article yet. I want to. I'm going to be reading this as soon as the stream's over. I don't know what the contents of this article are just because I haven't had time to read it just yet. If this is what I think it is, and El Salvador is trying to make Bitcoin legal tender, like the headline says, that's a big deal, and that is precedent setting. The reason that that's such a big deal is because for Bitcoin to reach the masses, the final frontier of adoption will be Bitcoin being made legal tender and you being able to pay taxes in it. If we get that done, gloves are off. Bitcoin's going to the moon. Yeah. If that's happening in one country, it won't be long before it's happening in a lot of them.
Just so you guys know, that is not the picture of the president of El Salvador.
Oh, come on.
That's just the guy.
I wish it was. He would have been.
That is
Jack
not-
Mullers.
Nah, that
Oh,
is-
he's at Bitcoin 2021.
Yeah, that was not the president
Dang.
of El Salvador.
That would've
Moving
been
on,
awesome.
more because we know we have one more article that we wanted to finish the stream out with.
Yep.
But Matt C says Plan B says stock to flow chart is still on track for continued bull run, even though it is
Yep.
close to breaking. I can answer that one real quick because we actually
for it.
talked about that last
Go
week.
for it.
Absolutely. Yeah, it is just that simple. It's still on track. It is close to breaking, but if you go and look at that chart, Matt, you'll see that we actually technically were below it a couple months ago.
Mm-hmm.
So just because even if we drop a little bit below it doesn't mean that we aren't going to get back to it.
Yep.
Ultimately, we are still on track for that, so that's a good thing. Next question we have from somebody. They said, what is your opinion on hash ribbon indicator on TradingView?
Hash ribbon indicator is not one that I use a lot, but frankly, I can't lie to you. I don't have a very good reason for not using it. It is a good indicator, and it's one that I probably should be incorporating into my toolkit more. Something that you should be paying attention to, guys. I will take a note of that, and I will make sure to
Hash
have
ribbon.
a better reason for why I do or do not use that.
We write that down.
Yeah, absolutely. I'm very familiar with hash ribbons. I just don't use it very often, so that might be just a blind spot on my part. Thank you, Eric.
All right. Jay Simmons says, are price fluctuations simply based off of folks buying and selling? So the crash was because of whales selling, and to go back up, more folks need to buy, question mark?
Yes, but you're backwards. I think the reason that we crashed was because the folks were selling, and the reason we're going to go back up, I think, is because the whales are buying. So I completely agree with you. I just think you got the two parties switched. I think this crash happened because the masses freaked out about Elon Musk, and they started selling, and, oh my gosh, everyone else is selling. I'm going to lose my Bitcoin. Let me sell. Institutions and whales and major companies, they see price crashes, and they don't freak out. They get excited, they look for cash, and they buy. That's how you make money in markets. They know that. They're very smart. There's a reason these institutions are whales. There's a reason Goliath is Goliath. He's very smart. I don't think it was the whales selling. I think it was the folks selling in your vernacular there. It's a great question, and I think you're absolutely right. I just think you got a little bit backwards. So, yes.
So I know there is one more article. These are 5 things that we want to be looking at for this week.
Yep.
And I think this was posted on Cointelegraph. So if you guys want to go read the article yourself, I don't know if Jeb's going to read the entire thing. Right, but there are 5 things that are important for this week. Because I think I told you guys last week, we did a lot of sideways moving. This week is going to be the big thing. I think we're about to see either a big jump or a big crash.
Yeah, I think so.
And I think
too.
these are 5 things to look at that will help us know what's going to happen.
The big kahuna. All right, guys, let's do this. Bitcoin price doesn't care about El Salvador? ? 5 things to watch in Bitcoin this week. News of a major adoption move has had no impact on lackluster Bitcoin price action prior to government approval. Can anything lift Bitcoin out of its range? Let me pause and address that quote even before we get into this. It has had an impact on the underlying intrinsic value of Bitcoin. I haven't even read the article, but I can tell you if it means what I think it means, it is a very good thing for Bitcoin. If the price action doesn't respond immediately, good. I don't want news like this to cause the price action to respond immediately, because if it does, it means that it's hype or it's FUD, and it doesn't have any impact on the long-term fundamentals of Bitcoin. Bitcoin's long-term fundamentals are driven by things like government adoption of it, and it becoming a legal tender in a country like El Salvador. That's a very big deal. Even if it doesn't impact the price today, long-term, the trajectory of Bitcoin will be increased to the upside because of that. So keep that in mind. Even if the price action has not responded immediately, that doesn't mean it won't. For example, whenever Coinbase launched 5 years ago, probably didn't have much of an impact on the price. Guess what? It does now, because it takes time. Don't look for things to happen overnight. That is a manifestation of a very bad mindset of expecting things now rather than delaying gratification and investing in the long run. Anyway, that was a bit of a tangent. Higher interest rates, good, says Yellen. A cursory look at the wider macro climate delivers an interesting mixture for Bitcoin traders and holders. Inflation is still the talk of the town in the United States, with Treasury Secretary Janet Yellen revealing that she would be in favor of higher rates. I agree with her. Interest rates being on the floor right now is not good for the economy, and neither is all the printing of capital going on in America and many other countries at the moment. At least not good for the dollar. Might be very good for Bitcoin. In fact, I think it is. Speaking to Bloomberg over the weekend, Yellen voiced support for President Joe Biden's latest giant spending package and argued this should give credence even if it resulted in inflation. This is what got us in this mess. Should be supported even if it results in inflation. You're putting the ends before the means. At Toyota, I've been doing a lot of study on the company of Toyota. If a project happens and you get the right result, but you do it in the wrong way, the project was a failure. Doesn't matter what the result is, it matters how you did it. If this package ends up stimulating the economy but screws over future generations, the means don't justify the ends, guys. They never have. This is not a good thing for the economy, so I disagree with Janet Yellen here. However, it is important what she's saying, because we need to understand the regulatory climate around Bitcoin. If we ended up with a slightly higher interest rate environment, it would actually be a plus for society's point of view and the Fed's point of view. I agree with that. We need interest rates to go up so that the economy can be stabilized, because right now, even more debt is being taken on than needs to, because so many people are capitalizing on these. I'll go into it in another stream. There's a lot to go into there. Higher interest rates tend to improve Bitcoin's appeal as a deflationary asset, but coming hand in hand with them is a surging US dollar this month, something that traditionally pressures BTC USD. After bouncing off the 90, the US dollar currency index is now busy making up lost ground, bucking a downtrend that began in mid-March. I don't expect that to continue for very long, but notice that the dollar is appearing anyway to gain in value over the DXY, which looks like a good thing for the dollar in the short term. These two charts, Bitcoin and the dollar index, tend to be inversely correlated, because when Bitcoin does well, the dollar probably isn't. And when the dollar's doing well, Bitcoin probably isn't, because its appeal isn't noticed as much. Nevertheless, I think higher interest rates would be a good thing for Bitcoin. I don't like the way that they're probably going to be achieved, though. El Salvador, Paraguay failed to flip Bitcoin bullishness. This is something I'm not going to go into too much detail on, but this is essentially talking about the exact same thing about El Salvador moving into adopting it and everything here. Short mount in classic bear signal. This is an important piece of data right here. Look at immediate price action, and anyone would be forgiven for having cold feet over Bitcoin on Monday. For all the excitement of the conference, Bitcoin 2021, that happened over the weekend, BTC USD is firmly range bound and minus a run of higher highs and higher lows, which could signal a breakout. Recent attempts to do so by escaping a narrowing compression wedge where volatility trends to almost zero have stalled. That's what we were talking about in our analysis earlier. At the time of writing, Bitcoin was trading just above $36,000. With funds rates lessening, positive signs were just about visible in some areas of the market, but others are already sounding the alarm. Causing concern are short trades on major index exchange Bitfinex, as popular Twitter accounts FOMOcap noted on Monday. A rise in shorts has historically coincided with major volatility, usually to the downside. This might be true, and this is the point I was making earlier, that Bitcoin could crash before it starts rallying. we're not necessarily out of the woods yet, guys. I want to make that very clear. It is very possible that happens. I don't think it's what's most likely, but it is very possible. Here's why I made that comment earlier to one of our super chats saying I think you got it backwards. The shorts are not the institutions. The whales are not shorting right now. The whales are looking for buying. The traders are shorting right now. The people that are looking at the 1 minute chart are shorting right now. The people that are looking at what's going to happen in the next 2 days are shorting right now. I tend to take a much longer term perspective. I'm much more of an investor nowadays than I am a trader. And the reason for that is because I want to bet on the long-term appreciation of Bitcoin and not get caught up in all the little technical volatility. I think that we're going to see a long-term increase in price action, even if we see a short-term increase in shorts and bearish price action. Let's go ahead and move through these pretty quickly. Ethereum eyes parabolic move versus Bitcoin. Ethereum has been rallying very quickly comparative to Bitcoin. We saw earlier on in this stream that Ethereum is doing potentially better than Bitcoin based on its chart, so that's something to keep in mind. This is our final point here, and then we'll go back and wrap it out. Miner stage highest outflow of 2021. Bitcoin's hash rate is showing signs of recovery with a modest uptick from 125 exahashes to 134 exahashes per second in recent days. Difficulty is still due to decrease by around 8%, which would make the miners more profitable, good for them, at the next automated readjustment in 5 days' time, compensating for a minor shakeup that accompanied recent volatility. There's been a ton of stuff going on with miners lately, especially involving China, then moving to America, potentially Tesla getting into it. That's pure speculation, by the way, so don't take that as gospel. Nevertheless, one confident miner who held through the dip decreased their holdings en masse last week. On June 3rd, another 2,501 Bitcoin moved a day later. This isn't a sign for selling, even if this day sees 3 times outflows like this. Let's go to full screen. The point of that is essentially a lot of people are selling their Bitcoin. They're not necessarily they're moving their Bitcoin, and they are more than likely holding on to it in the long run. Let's go ahead and talk to chat here for a little bit. Let's answer any final comments and make our final points. Before we do that, though, guys, if you are interested in trading Bitcoin and you want to use leverage, please make sure you're an experienced trader because leverage can wreck you. I'm not kidding. I've seen a lot of people get messed up. But leverage is a very useful tool for those of you who do know what you're doing. If you'd like to sign up for a fantastic leverage trading platform, the link for Bybit is in the description box down below. It does help to support this channel. It is a fantastic exchange. I can tell you from firsthand experience. It's great uptime, fantastic user interface, great customer service if you need it. It's a great exchange and one that I would highly recommend working on. What do we got, Tim?
Great super chat question from Eric Little. He says, do you ever fear that when mass adoption happens, that most people will not be savvy enough to open their own wallets and thus banks will offer easy solutions, thus centralizing it after all?
This is something I was talking to Greg, who is our curriculum specialist, about while I was in Tennessee. One of the major barriers to adoption is the lack of strong education about cryptocurrency. Guess what our company is designed to do? In case you guys don't know this channel is not just me, Tim, and Smay. There are 14 people that work at this company building education products behind the scenes. We have a lot of really cool things coming out in the next 6 months, just so you know. The Cryptocurrency Technical Analysis Academy is just the beginning of that, so make sure you sign up for that. The reason that that's so important is because the masses need to understand why Bitcoin is so important, or else it never will reach adoption. Caleb, who works for us now, Tim's brother, was talking about how Bitcoin should be the next big thing. It should be the greatest thing since sliced bread. The only thing that'll stop it is a lack of education, a lack of knowledge. That's why this channel exists. That is absolutely why this channel and why this company exists, is so that we can challenge that lack of knowledge. That's why we come on here every single day. It's not to pat our own pockets, guys. It's for you. It's genuinely to make the world a better place through education. Will what you just said happen? I don't think so, but I can't guarantee that because crap happens. The thing I love about Bitcoin is that Bitcoin exhibits some of the same qualities that many other growing technologies have exhibited throughout history. Pretty much every single technological revolution that has happened in the history of mankind has happened for one reason. It is easier to use the technology than it is to not use the technology. Let me say that again. It's easier to use and have the technology than it is to not have it. It's much easier to have indoor plumbing than it is to not have it. It's much easier to have electricity and internet and personal computers than it is to not have it. It makes your life easier. That's why our world has become so decadent in the last 100 years, is because technology is always making our lives easier. That's why as time goes on, the people that challenge that and do the hard things become more and more respected. Bitcoin needs to make life easier for it to reach mass adoption. Will it? That's why layer 2 solutions are so important. That's why I think the central banks may actually play an important role in the future of Bitcoin, because if they do this correctly, they could help to actually make Bitcoin easier. I think that enough people understand Bitcoin now and are on the path to understanding Bitcoin now that it will be easier for them to hold Bitcoin than the US dollar and anything else based on layer 2 solutions that are being built, such as Coinbase right now. It's a very valid concern, one that I think is being addressed properly by the community. Very good question.
Yeah, there are a lot of good questions here.
Yeah,
on
really.
Chat. Come back tomorrow. Ask these again. We do have to wrap out the stream because we are going overtime. However, Jeb is back, everybody. He is here all week. There is, I think next week you have one day you're going to be out.
Well,
so
it's actually this Wednesday.
that is this Wednesday?
That's
Oh,
C12.
look at my
C12
dates
is
are off.
Wednesday.
This
Oh, it
Wednesday,
always sneaks up
there will
on
be no
me.
Jeb. But guess what? He will be here the rest of the week, and we will make sure on Wednesday he still shoots some form of a video
Yes.
for you guys.
Yep.
But I do want to let you guys know we are back this week with our price predictions. Jeb is here, and so we have done our charting. Jeb and I are actually pretty darn close. We had to change one of our
Yeah, we
answers we said
actually had to
earlier.
change.
We both predicted Bitcoin the exact same number, had to change it. But where we are sitting, just so you guys know, on Friday we will crown a winner, and they will get to mark their win down on the HODL trophy. But Jeb thinks that Bitcoin is going to be sitting at about $42,000. He thinks Ethereum is going to be sitting at about $32.50 and Cardano at $1.95. Smay says $40,000 for Bitcoin, and this is he was mostly just a guess. I don't even think he did any charting this morning. $40,000 for Bitcoin, $3,005 for Ethereum, and $2.01 on Cardano. So we are all pretty stinking close because I had 41,500 on Bitcoin. Like I said, we both said 41,500.
We both said 41,500.
I let him change his answer because I wanted to be. I want Jeb to not get stuck in the middle between the two of us. So he got to go high. I still like my answer of 41,500 though. Ethereum, I said
41,500
3,000. I said 3,096. We'll talk tomorrow about why we got to our answers because there is a reason for them.
Yep.
But I am the low ball on Cardano. I do believe Cardano is going places in the near future. However, I think there is a pattern that it needs to continue to work on developing, and so it's still going to be sitting at about $1.78 on Friday, but I do think that we'll see a rally either over the weekend or the next week, but we'll see. We'll talk more about that tomorrow and the incoming days.
Yep.
But that's all I got, Jeb.
Well, guys, if you enjoyed today's stream, make sure to hit that like button. Let's see if we can't get to 1,000 likes with the time we have left. Thank you so much for tuning in. I'm back. I'm going to be here every day this week except Wednesday, and I believe I'll be here all week next week. We do Coffee and Crypto here at 9:30 Eastern Standard Time every single weekday, so make sure to tune in on weekdays for that. Subscribe to the channel if you haven't already. We are attempting to bring you the highest quality educational content here on YouTube of any channel in the cryptocurrency ecosystem by doing that with integrity and with humility. If that's something you're interested in, subscribe to the channel. And by the way, if you want to learn how to do technical analysis like we just did in this stream, I highly encourage you to check out the program that I launched over 2 years ago now called the Cryptocurrency Technical Analysis Academy. We've had 4,000 students go through CT2A learning everything they need to know about technical analysis. Drop us a 1 in chat if you're a CT2A alumni and you love it. If you type in Cryptocurrency Technical Analysis Academy into Google, you'll find there's like 30 reviews on it, and every single one of them is 5-star for a reason. Full 14-day money-back refund guarantee in case you decide that you don't like it, but I don't think you're going to do that, guys. Check it out. It helps to support this channel when you join the Academy, but that is going to do it for today's video, guys. Before I go, though, I do just first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.